I think that's what's happening. I think the liquidity is certainly going into the growth stocks. They're probably not going to miss, I think is what people are saying, although expectations for a lot of them have gotten very high. So we think that is the easy trade right now, but I'm not sure it's the right trade for the long term. I think some of these valuations are out of hand. They're being driven by Fed liquidity, and I think they're going to be disappointing.
Like which ones? When you say that, what kinds of stocks are you looking at?
So we've been trimming Microsoft. I talked about it last time I was on the show as well. Even though it's at an all-time high, it's actually performing in line to slightly below the market for the past month. It's trading at 10 times sales. It's a $1.5 trillion market cap. Expectations have not come down at all. Earnings are expected to be up 20% this year, 10% next year. If we do end up in this very low growth world, which will support low interest rates and therefore support the multiple, I'm not sure they're going to hit their numbers. And a stock like that cannot afford to miss numbers at this point.
Wow. So you think Microsoft is overvalued here?
I do. I mean, it's a wonderful company. I think they've done a lot of things right. But it's easy at a time of change to extrapolate growth ad infinitum. And that's probably just not going to happen.
Pete. Well, we're getting in the steel cage. This is a steel cage match now.
Yeah.
You just called one of your favorite stocks overvalued. You love Microsoft, Pete.
I do. But you know what? I also trimmed, and I actually trimmed this morning, but I still hold a majority of what I actually have.
Oh, no,
in
you
terms
trimmed
of options.
Microsoft,
I do not
too. You trimmed Microsoft, too. Tell me more, Pete.
That's not.
Tell me more.
Okay, that's not to say. It's not to say that I think that Microsoft isn't doing everything right. I think they are. But they have had an extraordinary move to the upside, Scott. And this is the one stock of all the stocks. This is the one stock that really, truly held up better than just about any other stock in the entire market. So when we went to the downside. And so it's been on this great path to the upside, continues to gain market share in all sorts of different areas. And I think Microsoft, I think that it is maybe a little bit in front of itself, but that's not to say it's why I only trimmed. I didn't sell it. I still think that there is upside to this stock. I still think that they're going to be able to surprise people when the time comes, when they deliver on some of the numbers that have happened. When you look at what's gone on throughout this whole COVID situation, obviously Microsoft has been one of those go-to names. So I think there's a lot of reasons to stay excited about Microsoft. And again, this is another one of these names where there are so many different verticals for them to make money. And I think that's part of the story here as well. When you look at teams, you look at all kinds of other issues.
Pete, don't try and save
really
it, man.
Are positioned
don't
well.
try and save the situation, okay? No.
You got to be disciplined. You got to take some off once in a while.
Yeah, well, okay. So you've now given us the next leg of our conversation, okay? Because I didn't know that you had trimmed that. And I didn't know that Amy thought that Microsoft was overvalued where it is. But now I put this into a greater context. I got Joe Terranova the other day telling me that he took profits in Amazon. I got Bryn Talkington a few weeks ago telling me that she took profits in Apple, of all things, sacrilegious to many. I've got two people now today telling me that they've taken some profits in Microsoft. So, Josh Brown, what do you take from that? What do you tell people who have been in these stocks who still think this is the place to be, but yet they've seen the run-up and they say, you know what? Now it's time to take something off the table.
Well, if you have a stock that goes up 75% and the overall market goes up 40%, then by definition, the longer you let that run on without trimming some of your position, you're just becoming more and more exposed to one particular company. And in some cases, you're turning the entire asset class in your portfolio into a much narrower proposition. So I think, like, even the best performing stocks throughout history, people that manage to hold on to them, they have to look at these things in the context of the rest of their portfolio and, like, their overall life situation. Like, how much exposure do you want to have to one company, given the fact that literally anything can happen to any company on any day? So I don't even think you need to have a fundamental change of opinion on Apple or Microsoft. If it's a $1.5 trillion stock, and you own it in lots of the mutual funds you own, and then you own the stock as an overweight on top of that, and it grows to be so big, you just have to ask yourself, like, am I overexposed, even if I love the company? So I think what Pete said is right. This is not just about how you feel about Microsoft's prospects going forward. This is about what is your exposure as an investor. So I don't think we need to make more of it than that. I can certainly see both
Josh,
sides of the argument.
My point is, though, Josh, there are a lot of places that you could look within this market to trim, to take some profits. But I've had multiple people now of our investment committee go to the best and the brightest, right? The ones in the lights are the ones that they're looking at.
Again, I don't think you have to have a change of view on how great Microsoft is. We all agree it's great. We all agree the CEO is doing a great job. I think you can make the argument of taking 10% of your position off the table because the stock is up so much, and it doesn't have to be more complex than that.
Kevin O'Leary?
You know, I would make a point about Microsoft that's unique. It is the only stock I can find that finds itself in growth indices, and I'm an indexer, so I'm rules-based. I don't have an emotional opinion, but I can tell you it's the only name that sits in a really boring index that is a dividend play like OUSA, but it's also the #2 holding in OGIG, which is a growth mandate. Show me a stock that does both. You can't find one. And that's why it's an overweight, and I haven't sold a dime of it. And I'm going to stay long right through the next 2 years.